Guys, good afternoon and welcome to Moneycontrol. We're here to give you a commodities update. I'm Karunya Rao and with me is Manisha Gupta. All eyes today on crude oil prices and of course oil and gas followed by that. First, let's touch base with on crude prices. Last week they were down 7%, another 3% down this week. What's happening?
Well, yes, lower lows are good news for India, definitely, and that has been a support. If you've seen your own equity markets, that I think
I thought as
crude
much,
can take some credit for that. But yes, the decline also comes in on the back that you are looking at a second straight week of US inventories build up. So there is more crude available in the market. The second thing is that US is now going to sell or release 15 million barrels from its strategic petroleum reserve. So 180 million that they had promised in this year, the last tranche is going to be 15 million. So there is that more crude coming into the market also. And then you have Chinese data, which is not so strong. Manufacturing activity continues to slow down. So is the case with Europe as well. And China is the largest importer of crude. So we are looking at weak numbers there. The zero COVID policy from China also does not help. And the dollar index holding at 112 also does not. So all those reasons putting some pressure on crude.
And what are brokerages saying now that we're in the last leg of this year? What are the forecasts on production and on pricing?
So, brokerages have had it very difficult all of this year because whatever they said not always came right and not on the times that they say would come right. And this time around, everybody that I've spoken to, international and India, say that it's going to be volatile, it's going to be a very big range, and they're expecting prices for Brent to see a support at around 80 on the lower side. And they did say that it can touch 100 as well if there are more geopolitical tensions, if the European Union does actually go back with the suspending or putting a price cap on Russian crude. How ready are the markets with that is something that they will want to watch. So it really is on a week-on-week basis, event-on-event basis that they're looking
just
at.
Just how the equity markets are also panning out. And okay, but in terms of production, how are OPEC countries, how is Russia placed? What's the update there?
So, it's a bit of a tit for tat that Russia and Europe and US seem to be playing it, and the crude markets clearly reacting to that. If all goes well, if we do see a demand coming back, it all is demand centric right now, by the way. If demand comes back, you will see prices see on the higher side. But when it comes to supplies, yes, OPEC and allies will be cutting 2 million barrels from day starting 1st of November. That would take that much crude away. There's a JP Morgan report saying that just Russia, looking at what everything is going around Russia, could take anywhere between 0.6 to 1 million barrels away from the international markets in sense of Russia as well. So supply side does not look so supportive, and demand, if that comes back, you will see support in crude prices. But having said that, not too many people feel that we will see prices go much below $80 a barrel. So when US says that they will start restocking for their strategic petroleum reserve at $72 per barrel, I mean, that seems a bit far-fetched.
Okay, well, that's the update on crude, but what's happening in natural gas? Because even prices have retreated there a fair bit, 15% this week?
Yes, 15% this week, 30% this month. So yes, it has been a very sharp decline in gas. So, all the concerns that we started with, that there wouldn't be enough availability, now seems to be easing away because the US is producing gas at record levels. It's exporting at near record levels. It has inventories which are much on the higher side, especially for this time of the year. And then you have European Union, which did say that they would want to have 80 to 85% of their stockpiles fill, which is now at 90%, Germany at 95%, UK has near 100% of their capacity full of gas. So that the near-term problems really do not seem to be there. Now it depends on what kind of winters are we seeing, and will the gas availability or the stockpiles continue to be there. Market experts say that if the gas capacity falls below 30%, that is when you are seeing the next leg of run-up coming in for the gas prices. And then much of course depends on what European Union does come 5th of December. That is when the date is to start banning Russian crude oil and gas. So December, as we start, that would be quite important to watch.
So in terms of near-term supply situation, things seem all right. How is all of this that's happening impacting our own markets? Because of course crude, we all know how the market sentiment also evolves with the dynamic crude prices. But if we talk about gas, do our own gas distributors tend to be impacted in any way?
So, well, when you look at the international markets right now, with the US, Europe and UK gas prices have coming off, Asian gas prices also have been under some pressure. In China also, we've seen the markets decline. For the Indian prices as well, the good news comes in sense of gas pricing, where the gas prices have continued to decline. If you look at the electricity numbers, also the latest one in Europe for the last 1 week, they have also slightly come off. Of course, if you compare it with last year, we still are on the higher side. We still are 3 digit percentage points on the higher side when you compare it to last year. This year as well, if you look at the gas prices, we still are up by nearly 135%. So it's still higher relatively as compared to last year, but from the highs of this year, we are quite comfortable.
Okay, one important question before I forget about crude prices. I'm sure everybody wants to know out there also. Diwali is coming. Can we expect any good news on the fuel prices given the massive cooling off that has happened of late?
So we've seen markets move in sense of VAT and taxes, etc. Anything more does not seem to be the case right now, because we are looking at consolidation at $90 for the Brent prices. Will the prices fall much below that? Does not look like it the case.
Okay, so unlikely that we see any more cuts in any form as far as our fuel bill is concerned. Okay, well, we'll wrap it up right now. Thank you so much, guys, for tuning in. Back again tomorrow with a fresh update on commodities.